assessment procedure. Assessment procedure will start from return of income. Lot of things are laid in return of income itself. So our understanding should be a little more, what should I say, greater in return of income, and only then we will be in a position to understand assessment procedure even clearly. What do you understand from return of income? What do you understand from return of income? Submission of income to authority, to the concerned authority. Say, I would put it like this: return of income would mean any communication that you give, it should be replied, and you expect something in return, not WRITTN, RETURN. That being the reason as why we call it as return of income. So you are expected to submit, and they are expected to approve, or they will, what should I say, deny, or they may say different things, or they may allow greater things also. It could be anything like that. So firstly, it is a statement of total income. Firstly, return of income is a statement of total income attributable to an assessment year. Attributable to an assessment year. That means one return of income would mean you should always tell assessment year. Assessment year 14-15, assessment year 15-16. So therefore, it is a statement of income attributable to an to an assessment year. Then what else? In a what? Prescribed format. In a prescribed format. Next. If I start writing, no, you should not feel that I am not giving opportunity for you to contribute. So tell. Filed by assessee or on behalf of assessee. Then to the concerned authority. The concerned authority. See, I am only telling, whatever you little know, you can also contribute. Yeah, that is covered. Assessment year means only for previous year. But we normally don't put return of income associated with previous year, always with assessment year only. That is the reason as why we say attributable to an assessment year. Then you are telling something. Submitter voluntarily or not order in response to a notice. Correct? In response to a notice. Then on or before due date or after the due date How long? Say you go to college or school, whatever it may be, college, school or office. If you say, sir, I will come 1 hour late, that is called as permission. Sir, I will come by lunchtime. Then it is half a day. I will come before 1 hour of closure. Then it is leave. So always you understand, when you say you are not telling within due date, there should always be a time within which you have got to complete. That will be considered as if you have done it before for some other purposes. So after the due date, but before the, I am not using the technical term, okay, before the maximum time permitted. Later on, I will define what is that. I will just explain maximum time permitted, or not beyond that maximum permitted time. What is that? That will differ from time to time. Okay. Now, tell about return of income. Now you can't say you don't know. Come on, what is the first thing? Statement of total income. Attributable to an assessment year. Filed by an assessee on or on behalf of assessee to the concerned authority. Submitted voluntarily or in response to notice on or before due date or after due date, but within the maximum period permitted. Correct? No. This is what you have got to firstly write. Come on, kindly just make note. In a prescribed format, I think you will be doing this. Okay. Then we need to know what is the due date. What is the due date? Due date is communicated under section 139.1. 139.1 gives you the due date. Correct? Can you tell what is the due date or what are the due dates? (31st of July, 30th of September, 30th of November. Correct. Which one should firstly be updated? In this three, which one needs to be updated first? No. Which one is to be updated first? It is not 1 out of 3. It is now 1 out of 2. My question is, which one should be updated first? September. Not correct. See, how it is to be updated? See, this is the way you have to read. See, in a printed material, you will not know which one got updated first. So, to whom 30th of November will firstly be applicable. So, where the return of income should be submitted with, a report by a chartered accountant under section 92E. Under section 92E, if a return of income is to be submitted with a report by a chartered accountant, then 30th of November, that is transfer pricing cases, TP cases, transfer pricing cases. So therefore, the first thing you should tell the last. Now let me ask you the question now. Once again, a different type of wording. Which one should be updated second? Which one should be updated second? July, September, July, September. Yeah, that was July. Second one to be updated is 30th of. Only 30th when I told between the two, you can understand that is 30th of September. So which entities? So there are 3 entities. One is company, then tax audit or any audit. It is not necessary that tax audit or any audit. Say where any audit is required for them. Because in income tax itself, there are many areas where you have to have it audited. So only then it will be taken up. Say for example, political party. Political party, when you have to take exemption under 13A, you have to subject the books of accounts to audit. It may not be tax audit. Are you understanding? Similarly, for electoral trust also, it should be audited by chartered accountant. But there is no tax audit for that. So tax audit or any audit. You can put it like this way. Then for working partners, where firm is subjected to audit. I am just putting it open. Therefore, it means if there were to be any other audit also, that is applicable to working partners alone. So, which one is to be updated last? Others. So, therefore, I can't update others first. Therefore, I asked you a simple question only. But anyway, you try the same way as how I asked to your friends. They will tell the answer the way in which you people have told. But this is the way about update. Are you understanding? Come on, make note. That is not a big mistake that you have committed and all that. So, the way in which you got to take it up. What happened to that Nagaraj? Sikasa? Don't know. Done. Now, who should file return of income? Not the person who is expected to affix signature. I am not talking about that. Is return of income filing compulsory? In that context, I am asking, who should file return of income? Have you understood? Who should file return of income? Say, because when you see this, you would have encountered in your personal life also. When you say that you are studying CA, all the neighbors and friends, relatives who have some problem with income tax or they have some doubt in income tax, they would definitely be asking a question. Whether I should file return of income or not. They would have already had some opinion. But yet, so the common topic would be between that person and you. Some talking they want to make. So wanted to show off that they are all faithful citizens and all that. They will ask a lot of questions. What will be your answer? Should you say for you don't file return and all that? So you can't say like that, no. So they will ask who and all should file return. See, instead of asking a question whether I should file that is return of income, they will ask who and all should file return of income. What should be your reply? Are you understanding my question? So please answer. Understanding the question is one thing. Answering to the question is another thing. They will ask a question this way. Until they notice that you receive. Voluntarily, who and all should file the return of income? Or is it compulsory? Who and all should file the return compulsorily? Where is that in law it is saying like that? So what is your answer to that?
Depends on the status of the SSC.
Depending upon the status of the SSC. Okay. What is that status? Okay. That means you always target or keep in your mind only salaried person, individuals only. Just started telling. What is the next one? There are 7 taxable entities that you have. So that if you start telling individual, HCF, firm, company, then AOP, BOI, local authority, artificial juridical person. This you tell, impress. There are 7 entities that you have, like 7 weeks, 7 days in a week and all that. Okay, that is all understandable. Then is it compulsory that entities should file the return of income even without having any income? Say they would have formed some entity, there may be no operations at all. Whether they should file return of income or what?
It's not mandatory, but if they want to, they can.
They want to, they can. That means option is given to them. If you want, you can do it, or else you don't have to do it. Something like that?
Not mandatory. It's not.
Come on. What is your answer? Forms. Partnership forms. Compulsorily they have to file return of income, whether they have positive income or negative income or nil income. That's all. For companies, not like that. That is what. Hey, whatever you want to tell, no, if it is there in provision, you feel very happy. There is no necessity for you to remember specially. So you will feel. I would have only written in my previous birth, I would have been a tax person, and my provision only had come in this section 139(1). That sort of feeling will be. So number 1, status based. For firms and companies, they got to file the return whether income is there or not. So it is status based assessee. Correct? You told like that. Status based assessee. Then? Okay. For individuals you told. So now out of 7 you told about 3. Then for others, say who should file the return of income compulsory. One is status based. I am not talking provision. The juice of the provision I am giving. Next one, income based. Asset or account located outside India. There are 3 types of assessees that you have. This is applicable to ROR. What is this ROR? Resident and not ordinarily resident. So status based. Company plus firm, not R, plus. Here total income in excess of basic exemption limit before taking chapter 6A reduction or similar exemption under various sections. Political party. Political party's total income not exceeding basic exemption limit before considering the exemption under 13A. So it is not chapter 6A that would be applicable for them. It could be exemption under the respective sections. If it is religious and charitable trust under 11 and 12. Okay. So total income exceeding basic exemption limit before taking chapter 6A deduction or similar exemption under various sections such as (11), (12), (13A) and so on, etc. Are you understanding? Before taking into consideration, see, you say total income. Actually, it is not total income, strictly speaking. Before deducting towards chapter 6A, it is only gross total income. Whereas they tell, especially in this particular section, as total income before taking into consideration all this. So, in a way, you can form in your mind that this is only gross total income. What is this? Asset or account located outside India applicable only to ROR. What is this? Whether any amendment that is taken up in the Finance Act 50? We had in Finance Act 14 where they say if you have an account where you are an authorized signatory or having any financial asset outside India, then you are expected to file return of income whether or not you have income. Are you understanding? That is a sort of scenario that they have kept. And because of that, what had happened is that many people have not kept their account or asset in their name. They have kept the account operated by somebody, asset in somebody's name, and they were beneficial owners. So therefore, many of them have not come into this return of income that it is compulsory for them to file the return. Are you understanding? I have an asset in, I means not that I am personally having. So, just for the sake of example only I am telling, I am having an asset in Dubai. I cannot own property in Dubai until some time back. Some 5 years back or so, they have just brought a rule that expats can also own. Because they have constructed lot of malls and lot of quarters, that is, I mean flats. So, only Dubai person cannot be making that investment. So, therefore, they have made it open. And what I have just done is that some ill-gotten money also I had. Because I am a politician. I have lot of connection with bookies and Hawala operators. And I have made money, lot of money like that. So, what I have done is that I have not kept it in my name. I have kept it in a person who is working there, in his name I have kept. And he will operate the account on my direction. Correct? So, I will not be covered under Income Tax Act because it is not in my name. Correct? And I don't operate. So, therefore, Finance Act 14 provision was not having enough teeth to catch people. What do you mean by enough teeth to catch people? The children will just develop this, what is that? Teeth. It will also bite. If you put your hand, it will bite. Will that really cause a lot of hurt? So, that will have a feeling of that it is biting. Like that only, the provision they had in Finance Act, that is Finance Act 40. Then people are just laughing. What is this you are doing? Intention is good, but you are not having enough teeth. Correct? On the other day, I was just seeing Facebook about dog, pet dog. Two friends were what should I say, showing a friendly gesture, and the dog of one of those two friends was just watching that its master is being befriended by another person. It was just watching. Then he made a fake gestures on the master of the dog as if he is beating, giving a push and all that. The moment the next push was about to be made, the dog had just caught the hand of the person who was making that fake hit and all that. So, of course, it was only for the purpose of video only. It was just kept as how dogs are very faithful to the masters. Because people who are having this pet animal will do all these extracurricular activities. Others will just go off. So at home we have a pet. Because of that only I am just watching all this. See what had happened, this person was just having a full jacket. It just caught and the full weight of the dog was there and it is hanging. And he is just trying to relieve and dog never left. Had it been real hand, no, at least some kilos you would have lost. So, bite means that is real bite. Finance Act 2015 is a real bite that they have brought. What is it they have just brought? Even if you are not having the asset in your name or not having an authorized signatory of an account elsewhere, if you are a beneficial owner, then you have to file return of income. Or if you are a beneficiary, then also you have to file the return of income. What is the difference between beneficial owner and beneficiary? Simple English only I am asking. Beneficial owner and beneficiary. Subhash. Correct. 100% correct. If I have bought the asset directly or indirectly, and where the benefit I wanted to derive directly or indirectly, my name will not appear. Somebody else will be holding. This is binomy holder, is what people just bring up now. So therefore, if Dawood Ibrahim being an Indian person, imagine that he had bought it on somebody else in Dubai. He is also caught. But he should be ROR. That is the only thing. Dawood Ibrahim is not an ROR. Imagine that he is an ROR and when he is holding any property outside India, that if he were to be a beneficial owner, then he has got to file the return of income, even though he is not having any taxable income in India. Or he should be a beneficiary. What do you mean by a beneficiary? He is not a beneficial owner, but he is deriving benefit. He never won, but he derived benefit out of that. Then also he has got to file the return. But there is one exception that you have for beneficiary. If beneficial owner had declared this as his income, then beneficiary need not file the return of income. Are you understand? If beneficial owner had declared that as his income, then beneficiary need not file the, or should not file the return of income. Need not only is appropriate. Okay. So therefore, beneficial owner or beneficiary. I'll write it in full. Beneficiary. This is a new amendment. It should just come Finance Act 2015. Definitely there will be a question on this. You can take it for sure. So beneficial owner or beneficiary. Here, in the case of beneficiary, there are two sorts of scenarios that you have. Beneficial owner not admitting as income. Maybe the beneficial owner may not be an Indian citizen at all. Correct? If that be the case, beneficiary should file the return. If beneficial owner have admitted this as income, then it will amount to duplication of income. Therefore, he should not file the return. Are you understanding? Beneficial owner not admitting as income. The other one is beneficial owner admitting as income. In this case, beneficial owner not admitting as income. So, ROI should be filed by beneficiary. Correct? Here, no ROI shall be filed. Are you understanding, all of you? Where we have started and where we have ended. Before that, I would like you people to go through the theory of what they are given in our institute study material. Correct? This is a little bigger. All these bold letters are new provisions that they have inducted. Okay? Come on. Vaishnavi, could you read up? Correct. I understood. So to crack it, it is going to take more time. So if you don't have good understanding on that, and our flow chart and all that, you please just check up institute flow chart only. Please read that.
The resident other than not ordinary resident within the meaning of section 6.6, who is not required to furnish a return of income under section 139 and who at any time during the previous year A holds a beneficial owner or otherwise any asset including financial interest in any beneficiary of such asset is not required to file return of income.
Are you clear? So now, would you like to take up some case study based on this? Firstly, make note of this one. So, as far as this status based and all that, they are given it here. Look into that. It is compulsory for company and the firm to file return of income for any previous year on or before prescribed. In case of any other person, on or before total income, any other person in respect under which exceeds the basic exemption limit is what they issue. Come on. No, they said there is a definition on 6.6 only for not ordinarily resident. They said other than not ordinarily resident would mean it is only ROR. There is no definition for ROR. You have definition resident and ordinarily resident. Resident and ordinarily resident. Okay. So now I am going to take up things on the beneficial ownership only. Beneficial ownership and beneficiary only. Shall I proceed? I will show you what is beneficial ownership in institute study material. Then we will take up some illustration. But illustration is going to be a little, what should I say, big. But you will have a complete understanding of the new amendments that they brought in 2015, which was not there in the earlier years. Shall I proceed? Okay. What is the beneficial ownership? Any idea about beneficial ownership? Beneficial owner. What is that you will understand as the term as beneficial owner? Not in the legal form of ownership. So not in the legal form of ownership. In substance is the owner. All these are points only. You can say not in the legal form of ownership, but in substance is the owner, bought directly or indirectly for his benefit or someone's benefit. Okay, this is what you have to understand for beneficial ownership. So, what is beneficiary? What is a beneficiary? Beneficiary, he is not in any way owner. He is not in any way owner, legal or otherwise. Legal or by substance. Correct. He is not at all a owner. Someone else is the owner. That is beneficial owner. Someone else being the owner derives direct or what? Indirect benefit out of the asset or arrangement. Are you understanding, all of you? Come on. They may ask a question, write short notes of the beneficial owner, write short notes of beneficial or beneficiary. Okay. Look into the size and then decide upon as whether to copy or not to copy. It's going to be a little, what should I say, something new which you don't find it in any textbook. So, shall I proceed? First illustration. Janvi will read out.
Mr. Jayesh Mehta, being a resident, an ordinary resident in India, who has black money in India, transfers the black money to Mr. Mir Ali in Dubai to the tune of taxable income in India.
See, asset means it is not property alone. See, in a bond of 10 crores, he may receive interest. Who is receiving interest? Trust will receive the interest. So, Mr. Jayesh Mehta had transported his money and is generating income outside India. Correct? We are not talking about this hawala and all that. See, somehow he just transferred. Our focus point is whether Jayesh Mehta will be booked for filing the return of income. The answer to that question is yes. Because he is a beneficial owner. He is a beneficial owner. To crack these sort of cases, it is going to take a little, what should I say, longer time for the department. So, people when they just transfer the money, they will not transfer directly in the eyes of others, easily catchable. You would have seen a lot of movies and all that. So, when ill-gotten money, when it is transported, they will use many vehicles, take a lot of diversion and it will reach destination. So, in the case of one movie by name Tupaki, the person will tell you take this vehicle, go to that particular place, put it in parking lot, take another vehicle and proceed. This way 4 or 5 vehicles you would have changed. In the final climax, they will tell that whatever bomb blast in Mumbai, I will assign, you are the person who had committed this because in CC camera, all these got captured and beside your death, you will also get disrepute. So, any person who wants to do any economic offence will definitely be doing not in a manner where he can be caught very easily. Say that reference to that particular movie is only for the purpose of telling you as how economic offence is being committed in such a fashion that he planned it, where he is putting the blame on somebody else and where he would have committed the crime. So, Jayesh Mehta is the real owner. So, all this, what should I say, Mir Ali and trust are simply sham. It is only his money and he is deriving income out of that. Correct? He is the sole beneficiary is what they stated. Now, look into the answer. Read.
Prior to Finance Act 2015, Mr. Jayesh Mehta was not filing the return of income since his income does not exceed the taxable limit and he does not hold any assets outside India in his name.
This is like child, what should I say, catching your fingers. So, it will just try to bite. Correct, no? You will not feel that. You will not feel that. But the child will not leave. It has got a substance to bite.
Explanation 5 to section 139(1) inserted by Finance Act 2000.
Correct.
Now, as per the fourth proviso, the beneficiary.
That's it. Now tell, do you require this to be noted? Huh? Okay. This could be a question also. You can't, I am just telling you, full credit goes to that Vinod Gupta. So I was just following, say we were just trying to crack us how, what is this, how to illustrate. So given a nice illustration. You will not find in any textbook other than this general one. After finishing CA, if you want to do some specialization, please have this book. Not now. That is only for me. Shall I proceed? Two more we have. Second one is going to be, see, all are real stories only, real stories. How they have just trying to bring people into tax bracket is something very good. Shall I proceed? Rekha will read.
Mr. Ketan Parekh wished his agricultural land in rural area not being a capital assessed to mother of Dr. Dharamveer, mother of Dharamveer who lives in Mumbai, worth Rs 20 crores. Mr. Dharamveer is a permanent resident of Dubai and is a non-resident. Mr. Dharamveer buys a home of Rs 20 crores in Dubai in his name. Dharamveer gives an irrevocable power of attorney to Mr. Ketan Parekh to sell, gift or lease or transfer the home in any manner. Also, a deed is entered by Mr. Dharamveer that after completion of 10th year, home will be transferred in the name of Mr. Ketan Parekh and or wife of Ketan Parekh.
What has happened? Can you tell the story? Read that once again and tell the story. Tell. No, I want the full story you have to tell.
Ketan Parekh gives his property to mother of a person who is in Dubai, whose name is Dharamveer. And Dharamveer buys a property in Dubai for the same word and gives a power of attorney to Ketan Parekh. And also at the completion of 10th year, the home will be transferred to Ketan Parekh.
Correct. You have just summarized what happened. But there is a parallel gift they have made. What is the parallel gift that you find that you made? Ketan Parekh, actually this Ketan Parekh is a stock broker involved in scam. Arshad Mehta, Ketan Parekh and all that, they are all people involved in fraud. So you have chosen a right name only. Ketan Parekh transferred his agricultural land, not being a capital asset. Rural agricultural land he transferred to mom of Dharamveer. So he is in Mumbai. Land is in somewhere in Maharashtra. Let us assume land, agricultural land, rural agricultural land is there in Maharashtra, transferred to mom of Dharamveer. So not a capital asset, so there is no question of capital gain coming in there. So Dharamveer, this worth is 20 crores. So what Dharamveer does is that he bought a property in Dubai only, not in India, and he had given the power of attorney to him to sell, gift, lease in any manner, irrevocable, and he had entered into also a deal is entered by Dharamveer that after completion of 10th year, home will be transferred in the name of Ketan Parekh and his wife in Ketan Parekh. So, in the name of Ketan Parekh, this power of attorney is given for the home in Dubai. Now, the home in Dubai is not in the name of Ketan Parekh. Correct? There is no income out of that, but there is an asset in his, not exactly in his name, in the name of Dharamveer. Consideration was given in the form of land to mother of Dharamveer. Dharamveer bought the property in his name. And he had given an irrevocable letter of, irrevocable power of attorney in favor of Ketan Parikh that he can do whatever he wants. And he also tells that 10th year it will automatically go to the name of Ketan Parikh or his wife. Now, whether return of income should be filed by Ketan Parikh, who is not having any taxable income, but is a ROR. You have to say yes or no.
Yes.
So, because we have handled the provision, so illustration becomes very easy. So, just yes or no we are telling. So, let us just see. Correct. Directly or indirectly, no? He bought the property in Dubai indirectly. Dharamveer was not knowing how to buy property in India. 20 crores he was having. This is called as another sort of Hawala transaction only. So, land is exchanged for building in Dubai. Are you understanding? So, this is what people do. Like currency swap. This is property swap. Want to make note? Say yes or no. Say you don't have any other go, you don't have a feel. If you feel like, sir, I will manage me, I will go to the third illustration. Okay, make note. Say, maybe the same question also may appear. Two more slides we have. Illustration 3. Just watch out.
House property in Singapore from the bank balance of rupees 1 crore as per the proviso in section 130 income of Mr. Chandela.
Correct, no. See, this is coming under clubbing provision itself, it is just taken up. So now you will not forget to write this provision in case of any theory question is asked. So this is what you just find the chart what we have developed for which fitting example we have just taken out. Shall I proceed to the next one? If beneficial owner is admitting this as income, then beneficiary need not file the return of income. Shall I proceed? All of you. Joseph? Shall I proceed? Say now, how many types of returns that you have? Types of returns. Any idea about types of returns that you have? I am not talking about the forms, whether it is which form you are going to file the return of income for a particular assessee which is having only PGBP, person having only one house and salary income, person having salary income and two houses. I am not talking about the prescribed form. I am talking about the types of returns that they discuss. Huh? 4, what are those? Thiruvanmiyur, you know. Thiruvanmiyur. She goes that place only. There is one particular road called as Lattice Bridge Road. Lattice Bridge Road. I remember like that only. What is this Lattice Bridge Road? That is Lattice Bridge Road. Correct? No. Here L stands for loss return. B stands for belated return. R stands for revised return. D stands for defective return. Easily remember. That is the point. You should not just wait for a moment. You have to tell everything right. So that is the way I just normally remember. Loss, belated, and revised and defective. This is conveyed in under section 139. Remember 3 under section 139. 4. Why you hesitate? Revised return under section 139. All of you? 5. I am not very sure. We will just check up 139. 9. I am not very sure. See, not remembering the section is not a sin, but giving wrong reference is a very sinful thing. Anyway, we will just rectify. It is not an examination in which we are doing all this. So, 139, 3. I remember the first point itself is 3. 139, 4. Then you have lot of other sections in between. 139, 5. 139, 9. Okay. So, these are the 4 types of returns that you have. Then, there is one more return also that we have. This is, you can say voluntary return and all that. You can say simply as return under section 139.1. 139.1. Okay. But anything special that we tell, it is loss, belated, revised and defective. Say if I say ordinary return, but what will happen is that sometimes we will say original return and ordinary return, there will be a confusion. So therefore I simply mention as return. Return filed under section 139.1. You have loss return 139.3. Then after loss it is belated. Then it is revised and lastly it is defective. Say, listen to me for a few minutes. You can make note later. What do you mean by loss return? Having? No, you have to be a little more careful in telling. should the total income be negative? Say in an interview, see what is likely to happen, I am going to foresee. You score unknowingly good marks in DT. Say, you might say that my confidence level was less and all that. So you would have seen all questions and all that coming up very nice. And you have done reasonably well, but you have not expected that many marks, you have got it. So you have submitted the mark sheet also. By data we may not tell, but there you have wanted to score, tell 91 I have secured in DT. Wanted to just show off. The other person may be interested in DT. He may ask you a question. What do you understand from loss return? Would mean you have got to be a little more careful in communicating. You can't say loss return as loss return only. You have got to tell a little specifically. What do you feel like that? Something specific you have got to tell. Say, after all, it is only 5 heads. No, so don't panic. Very simply you can do. Salary, you can't have negative income. House property, you can have negative income. PGBP, you can have negative income. Capital gain, you can have negative income. Income from other sources, you can have negative income, but you can't carry forward. Okay. So, these are the 5 heads on which one is not going to be there. Then, income from house property. Should that head of income having negative income, that you take it up as loss income, loss return. Or PGBP, you have loss. Capital gain, you have loss, but you cannot adjust this capital gain negative with other positive. So, is that the total income to be negative to call this as loss return, or if you have in any of the heads negative income, can you call this as loss return? Now, your mind is going for a sort of a revision. So, loss return, what people normally perceive at the very initial stage is that total income should be negative. No, it is not like that. If I have positive total income, but when I have in the system, one of the component being having a negative income, then it becomes loss return only. And the very purpose of calling this as loss return is that it will give eligibility for the assessee to carry forward. Therefore, you expect loss return to be filed on or before due date. Are you understanding? Loss return should be filed on or before due date as specified in section 139(1). Are you understanding, all of you? So now, we have to deliberate whether income from house property loss, in order to carry it forward, should that be filed on or before due date? Answer to the question is in the negative. Correct. What she told is correct. For income from house property, negative income, even though it may fetch you a negative income, but it is not necessary that the return should be filed on or before due date. So therefore, having negative income in house property is not to be considered as loss return. Are you understanding, all of you? You don't have to show any urgency for an assessee who is having negative income in house property to file the return before the due date when you have lot of files to file. You can as well keep that to the second priority, not in the first priority. So, in the case of salary, you will not have negative. House property also, you can file the return, that is, you can file belated return, but still you can carry forward. And in income from house property, no negative income can be carried forward. So therefore, loss return would mean, if there were to be a loss either in PGBP or capital gain, then it is loss return. Are you understanding, all of you? So this is a deliberation. So when you go little deep only, you have got to tell. So in an interview, when they ask you a question, what do you feel like loss return? Sir, in salary you will not have loss, and house property loss can be carried forward even without filing the return within the due date, and income from house property for which you cannot carry forward at all. So whether it is filed before or after, it has got no, what should I say, effect at all. So only if you have negative income in PGBP and in capital gains alone, then it is referred to as loss return. This is what we will be expecting. This is a perfect direct reply. Are you understanding, all of you? So therefore, loss return, if it is filed on or before due date only you get the eligibility. So that will be considered as a return filed as per section 139(1). So if any return filed there is after the due date, then it automatically gets shifted to belated return. So what are the disadvantages that you derive in the case of belated return? What advantage I was just talking for last return I will not be in a position to get if I file during the period after belated return. Are you understanding? So please understand, at the very initial stage I told you voluntarily or in response to notice is what I told you. So sometimes 139(1) will tell you the due date. Sometimes that due date will be indicated by the notice provided by the income tax officer. That is the assessing officer would issue a notice. Would issue a notice as why don't you file the income tax return? And he will tell 10th of January is the date within which you got to, or 10th of February within which you got to file the return of income. So if you have filed the return before 10th of February, it will not be considered as belated return. If you have filed it after that, then it will be considered as belated return. Are you understanding, all of you? So it is not that we should understand belated return would mean filing the return after the due date as per 139(1). Even a filing beyond the date provided in the notice will also be considered as belated return. Are you understanding, all of you? So this is one thing that you have to understand. So I am just doing a bird's eye view. Then we will go through institute study material and the appropriate ones we will take note. The next one, revised return. What do you mean by revised return? So it is a return that you are substituting with, that is substituting for the earlier return that you have filed. But belated returns can never be revised at all. Therefore, the original return should have been submitted on or before due date. So here is a place where we will have a confusion. If a notice is issued by assessing officer asking the assessee to file the return on or before a particular date specified in the notice, can the assessee claim that such return that he had filed is on or before due date? Can he file a revised return? Are you understanding what I am telling? Let me repeat. An assessing officer is issuing a notice that you have got to file your return of income. From our records, we find that you have not filed the return of income on such and such a year, because he was filing. For a few years, he had not filed the return. He is asking him to file the return on or before the due date. On or before the due date specified in the notice. And he had not filed the return. He filed the return as per the or within the time given under notice. 10th of February is the date he had given. 9th of February itself he had filed the return. On 11th of February he finds that what he had filed on 9th is a wrong information that he had provided. Some correction he wanted to incorporate. Can he file a revised return on 11th of February? Are you understanding my question? Tell. Yes or no? No. How do you say?
Because it is not being filed voluntarily by the SEC, it was only on
for belated return you have told not only 139(1) and you have also taken into account the notice period given by the assessing officer for belated return. So for revising return, why you feel like that I should stick on to 139(1) and not the notice period given by the assessing officer? Wow. Similarly, last return also. Supposing the assessing officer had given notice 10th of February. Can you say 9th February I will file and it is last return, can I claim it? So here the base is always, I will put it this way, base is always 139.1. This cannot be extended. Whereas belated return, base could be 139.1 or, yeah, I don't want to put the notice. There are different types of notices that we have. 142A is what I got to put it. So, or notice period given by assessee. I am not using the section reference right now. I will just slowly only I will induct. Notice period given by assessee. Here it is assessing officer, assessing officer. So here base 139.1 only. What will happen is that, if I just give notice period given by assessing officer, what will happen is that the assessee may try to influence the local assessing officer and influence him to give a notice with an extended period and try to take advantage of loss return as well as revised return. Are you understanding, all of you? So there is likely possibility of collusion between assessee and assessing officer. We are not suspecting anybody, but after all, at the end of the day, the government's exchequer will get affected, no? So therefore, they will be more protective. Even the people who are administering the department may also succumb to pressures, and they may also be victim to offers made by assessee. Therefore, they have closed the door. So only for belated return you can take up 139.1 or the notice period, whereas in the case of loss and revised return, it should only be 139.1. Nobody can change it. So your revised return can be revised more than once. Any number of times you can revise. But you will always be very careful. Revised return cannot be revised after assessment is getting over. Are you understanding? When assessment order is passed and it is given, then that point of time, sir, I have filed my return. Before due date, I get the eligibility of filing any number of revised return is what I have learned in the classroom. So, based on his order, I will put a new, revised return would mean, then there is no meaning in having all this provision. So therefore, they say revised return cannot be filed after assessment order. Are you understanding, all of you? So when you go through the theory, if you know this beforehand, then it will get into your mind so fast. Defective return is a return which was filed with some defect. There are a lot of conditions, because defective return for which, what defect you can tell? Many number of defects that you have. So where they give 15 days period for rectifying it. Okay. So now let us just go through all these sections. Shall we? Firstly, to start with 139.3 loss return, lattice bridge.